Hello and welcome to another episode of FinTech Focus TV, powered by Harrington Starr, global leaders in financial technology recruitment. Head over to harringtonstar.com where you'll be able to see some of the greatest jobs in financial technology recruitment across the world. You'll also be able to find a host of insight to help you grow your brand, your team, your network and your career. You can see the latest financial technology salary survey. You'll be able to download the issue of the Financial Technologist, focusing on the appetite for disruption. And our latest Top 1% Workplace Awards will be out at the end of this year. If you work for a company that's a great place to work in financial technology, we want to hear from you. Enjoy the show, and I'll see you soon. Hello and welcome to another episode of FinTech Focus TV with me, Toby Babb. I am absolutely delighted to be back in the studio today and introducing you to Balraj and Tim from Tradefeedr. How are you guys?
Hey, Toby.
Good to see you. Thanks for coming in. Been hearing and speaking a little bit beforehand about what you guys are doing. It's a great story, and it sounds like some really exciting things to go. You guys are, I think, bang in the right area at the moment for everything I'm talking about and where people are excited about where the industry's moving, the sort of challenges people are facing. We're going to get into all of that, and we're going to find out a little bit more about the journey. But before we do that, let's do the intros. Tell us a little bit about yourselves.
My name is Balraj Bassi. I am one of the co-founders and CEO of Tradefeedr. In terms of background, well, I think if you go back long enough, I'm one of the ex-Lehman people.
I saw it on the LinkedIn to 2008, so we all know what happened then.
Was there until bankruptcy, and then after Lehman, decided to do a stint on the buy side. Mm-hmm. Myself and Alexei Jiltsov, who's another co-founder, set up a hedge fund called BlackTree, and we did HFT for about 7 years. Exited, and then
how was that switch? I mean, it's a
well, if you go back to 2008, 2009, I think
inevitable.
Sometimes you don't start a new operation unless you've thrown out the old one.
Yeah.
And that was a unique opportunity because everybody was just finished at the same time.
Yeah.
And I think we had enough of banking at that time.
Yeah.
Had some friendly clients; they were willing to invest, so we thought we'd try something different.
And I think that Lehman thing just led to a whole lot of innovation and entrepreneurship at that sort of time, didn't it? And so you did that, and then decided that.
And then wanted to jump on the FinTech bandwagon. And rightly or wrongly ended up here. So
there it is. Well, we'll find out. I've got a hunch it's going to be right, but we'll come on to that in a minute. And Tim?
Yeah, so I'm Tim Cottage. I've been in the foreign exchange trading business for, it seems like most of my life, about 25 years. I was, we're talking a lot about FinTech now, but, when, if we go back to 2004 at Barclays, there wasn't a lot of, tech in the fin. It was very much manual trading, human traders, mine yours, sort of stuff. And it was my group that was the first to fully automate market making in foreign exchange, to actually recognise the value of statistics and modelling and to automate trading in foreign exchange. And looking back now, you could never imagine a time without electronic trading.
Yeah.
There was one, and we were the first to do. To automate all that stuff.
It seems funny, doesn't it, that's 2004.
2004.
I remember starting in 2000, and there was always tech roles that we were doing into banks at that sort of stage, but it was completely different, wasn't it? And the evolution of the market over that sort of time has been remarkable, really.
Oh, absolutely! It's absolutely transformative. And originally it was a lot of politics, really. A lot of vested interests, people that didn't want to lose their jobs. Naysayers that would just say it can't be done. You can't teach a machine to trade. Well, you can. Well, you can. So a lot of the foreign exchange is what I've done. But a lot of the group, our group at Barclays created a lot of the innovation in the market. Decimal pricing, is one of them. So did that banking thing. Then moved on to running platforms, so I ran EBS, which is the main foreign exchange interbank platform, electronic platform. So I ran that for a number of years, and then retired to be an investor. And a few years later, the circle closes, and I meet Balraj and invest in and work in Tradefeedr.
Yeah.
Now, doing the next stage of.
So
what is that journey?
It seduced you back in.
Yes, absolutely, absolutely.
So talk to me about that. So we were talking beforehand, and I hadn't realised that was the investment retirement that sort of came into it there. You saw this product, and not only did you invest in it, but you did the whole thing of saying, right, I want to be involved in this as well. What was it that convinced you to do that?
So two sides of this. I'll do the simpler one first. As an investment approach, it's like angel investing, but you actually turn up and and dig. So rather than just giving advice or networks or whatever, that sort of help that you would get from a normal angel investor, to actually turn up and do the job is a way of realizing value in your investment. As well, so that's kind of a neat investment approach. Why Tradefeedr? A lot of different reasons. So the main ones, it's all about networks. It's all about which is the firm that's going to be able to take advantage of the opportunities in data for the next stage of evolution in financial markets. And Tradefeedr had got all the tech connectivity was done to major banks and major clients. All the data agreements, all the legals were in place with all the banks and major clients. Data was flowing, being stored. The tech was there. So you've got even before you get onto what products you could build. That network and the legals and the connectivity is super valuable, and allows you to build anything you want on top of that. So that's valuable. And then as a job, it's at the stage where now it's about building solutions. And what can you do with the data? Because all the hard work, all the hard yards of getting people to sign up and getting people to connect and getting the data in has already been done. So it's a perfect time for me to come in.
So you just come in for the fun.
Exactly.
Well, let's talk about the bit before the fun, and actually before we go into all of that and talk about the sort of the story and the what and the why and the how, let's talk about the business itself. So give us a sort of an elevator story about what you guys are doing and how you're transforming the market.
Sure. I think when we started up, you always tend to have a template in your mind, right? You're like Uber for X. I mean, what are you trying to do? What business templates have worked somewhere else? What's currently in vogue, and what do you think will work in the market where you've got some background and experience? And what we looked at was open banking APIs and the rise of open banking APIs. So typically, your retail transactional data is locked in within all the different banks. But you can't really access it. It's very difficult to get a hold of. And thanks to legislation, open banking APIs became a thing. And now, you're in the kind of crazy situation where retail banking has jumped in front of financial markets in terms of data availability, access, and innovation.
And
it's because
in a fairly spectacular way as well, right?
In a fairly spectacular way, and you've got companies like Robinhood and Plaid and so on and so forth. And so you've got a financial market, which are the most data-driven industry there is. And you speak to very large, sophisticated clients and banks, as well as the kind of incumbent platforms. And the technology tends to be old. If you do want to get access to your trading data, you're left with various different formats. It's very difficult to standardize all those metrics. There's a lack of trust in the system. And your so-called transaction cost analysis players or TCA providers are either owned by market makers or platforms themselves. So it's a kind of like strange situation where large, sophisticated clients want access to their trading data, and they can only get it either by investing a small fortune in tick databases, paying a TCA provider, which is owned by a platform or a market maker. And even then, there's no standards for the industry, and there's no aggregated data to access. So we looked at the open banking framework and we thought, right, the time has come in terms of tick databases are cheap. Large clients are much more open to engage with fintechs than ever before. Let's try to take this template and then basically embed it within financial markets. And to do that, first of all, we had to settle on a common data agreement. Could we get the largest market participants to sign up to a common data agreement to enshrine all the data rights? Because without a common framework which describes the data flows and enshrines everyone's data rights, you have no data platform.
Yeah.
So that was the first challenge we had to overcome. And then you had the cold start problem. Banks don't want to sign up if you don't have any clients.
Yeah,
clients don't want to sign up if you don't have any banks. And we went around.
Plus all of the procurement issues around it as well.
Oh, those have been the bane of my life. The last,
and every fintech founder in capital markets, right?
I think. Well, I come on to that. The first thing was, how do we break this cold start problem?
Yeah.
And we were lucky that we broke it quite quickly.
Mm-hmm.
So
what did you take from that? How did you break that?
I think if you've got a compelling product, what we found is if you go to some market participants, they don't want change.
Yeah.
So it's very difficult to convince somebody to do something without there being market demand. So you have to do a lot of running around, demonstrating the value, and sometimes you just have to wait.
Yeah.
So you have to create a certain amount of noise, a certain amount of knowledge about what you're trying to do.
Yeah.
And then eventually a few clients and banks sign up. And then it grows. Then you end up with a snowball effect.
And this is really interesting as a sort of first-time fintech founder to go in there and be able to recognise that. And it's bootstrapped at this sort of stage, I presume, is it?
Yes.
So you're going out there and I see a lot of founders sort of sit there and not necessarily understand the runway and the timescales that it can take to do all of that sort of stuff. Mm-hmm. And then, as you said, look, coming from Lehman's and then the buy side, et cetera, there's not a classic entrepreneurial background to come in there and recognise all those sort of things. So the scale of learning must be...
Yeah, but we were guilty of that as well. What we thought, because our background back when we were in a hedge fund at Lehman, in a bank, if you wanted something done, it was done that month.
Yeah.
I mean, you just sign it off.
Yeah.
If I was a client, when I was on the buy side, if I want something, I'd just sign it off.
Yeah.
Things have changed quite a bit, and now the procurement times anywhere from 6 months to 18 months.
Yeah.
So we've gone and done our SOC 2 audit. There's loads of things you can do to shorten those timeframes.
Yeah.
The onboarding time is huge. But then also, what we take away from that is that once you're able to create this foundational data network, so the more people sign up, the more that network data becomes important, the more you become established, the more valuable it is as well, because nobody else wants to go and do all that hard work of signing everybody up and spending 2 years in InfoSec reviews.
Yeah.
And it does get easier, but it was extremely difficult at the beginning.
Yeah.
And I think it's what we describe it as the foundational work. Getting everybody on, signing them up, getting them integrated, getting through vendor onboarding and getting data flowing.
Yeah.
Before we even come on to developing products and usability and everything else, it was just getting the...
So this was all pre-product as well that you were getting people?
We had
MVP.
what we call the first version of the product. And that's what started the growth stage.
Yeah.
But then it's almost like everyone likes the first version of your product.
Yeah.
That's great. But then you still got to go and invest 2 years in getting everybody signed, integrated, and using it.
Yeah.
And I think it's that middle that part is just kind of an investment in your company.
And so this is the hard yards before you turned up to into all of this. When you're hearing that and you're seeing that the sort of businesses that have been on board, and I know that some of the numbers about how many companies now that you've managed to get on board. What do you think it would have been about the story to that sort of stage which persuaded companies to say this is someone who we need to be working with?
So you get. I suppose it's like in any business, you get the early adopters that just buy into what we're trying to do, can see the value, from the get go, and start using the platform. And then you'll have another set of people that really have to be convinced that they have to care before they care. Yeah. But then you get a network effect. We're a network company. Yeah. You get a network effect once you've got. Clients that have got half of their banks sending them data, well then they start to lobby the other banks that they need the data. Yeah. And vice versa. If you've got banks that are seeing the value in having their clients on the system, and banks and the liquidity providers. Some of them are non-banks. When they see the value in having clients on the system, then they lobby their clients to also be on the system. So it's really, once you get going, the network of once you reach a critical mass in the size of the network, and then it spins up, and then everyone else needs to be and wants to be part of it, because the network's up and running, and they're getting pressure from the people that they work with in the industry, across the industry, to be in there as well.
Yeah, exactly. I think that's a great position to be in, isn't it? I've spoken to a couple of companies who've been on that sort of journey, and they talk about their products sort of becoming inevitable in their space after a certain time. So because of that sort of impact, and I actually think that's quite an interesting, and this is good timing, isn't it, as well? So it's 2019 you launched the business.
Yes.
So I think that's, funny enough, a time where you just started to see people and the banking sector start to collaborate a little bit more. And I think it had traditionally been, if you go back to even the sort of race to zero, to as low latency as possible, it was always very competitive tech. And I actually think that over recent years, and correct me if I'm wrong on this, but I think over recent years there's been much more of a collaborative industry where people are looking to do things, and that could well be through the API drive, etc., etc. And I also think that the space you're in, as I mentioned right at the very start of this, data is something there which everyone's been talking about for a while. But I think now, in a similar sort of stage to probably when people start talking about cloud, probably 2004-05 as well. It probably took a pandemic for it to be really adopted into the financial markets. I think data's been something people have been speaking about and saying, we need to have a data strategy, we need to have a data team, etc., etc. But again, now I think the real use cases for it in financial services are starting to be, to be adopted. I've said this many times on the show, that I think there are sectors outside finance that really nailed data a long time before the financial services sector did. And I think this is almost like a coming of age period at the moment, which is where it's so well positioned. How have you found that sort of view of the marketplace?
I mean, when we first were going through InfoSec onboarding, the concept of some banks that the data would go to the cloud, and this is only 2019, was somewhat alien.
Yeah.
And they were still going through their own cloud strategies. And now since then, we've had, obviously, CME's done a partnership, LSEG's done a partnership, and every bank has a cloud strategy.
Yeah.
But initially, the concept of client data going via APIs through an intermediary was a frightening prospect to some of the market participants.
Yeah.
And that's changed massively. Also, the cost of processing huge amounts of data and doing it in a secure way has also collapsed.
Yeah.
So if you go back 10 years ago, I don't think a business like Tradefeedr would have got off the ground. The capital investment would have been unimaginable.
Yeah.
And now, thanks to cloud tech, we can do it. We can do it, and we can do it better and more securely than traditional providers can.
Yeah.
Also, to expand on the evolution of trading technology, it started with, I would say, aggregating prices from various providers. So more and more about price discovery, then the settlements and the rest of the trading life cycle. But then the data part was always neglected because it's difficult to get your trading data.
Yeah.
And I think there's a huge drive now to be the data aggregator that provides clients with a consolidated view, not just of their trading performance, but the market's trading performance.
Yeah.
Is my market impact good or bad? Well, what's the market impact of this instrument traded over global data sets, not just my data? And how do I access it, and how do I embed that into my automation drive?
Yeah.
And I think that's kind of where we're trying to help the buy side community.
Yeah.
And other banks also, the banks want to engage with their clients. So if their clients can get trading data in a consolidated, trusted way, then banks can use that data channel as a way of engaging further with their clients, and also getting some peer review. Are my algorithms good? Is my market share not as good as the performance of my algorithms? And questions that banks have always asked.
Yeah.
So I think it's this kind of common data layer helps banks engage with their clients, helps clients automate their trading decisions.
And I think there's always been, the integrity is so important with data, right? And the quality of data and the significance of the data that's going into it. And I think for a similar sort of I guess trust is completely embedded into the whole financial services space. That's a part of the whole issue of cloud adoption. Everyone was fearful of getting it wrong and having a breach and all the impact of everything that could have been in there. With data, it's how accurate is the data, and people then having their egos bashed by having their intuitive decision making of what was right or wrong, what would have been in there. It's probably the whole. We can go into digital assets and where trust comes into to everything around there. I think it's a really, really interesting piece. But I think data's at that stage now where people are able to understand the integrity of data, where people are able to understand its significance in being able to tell the story that allows people to make better decisions quickly in a race for efficiency and optimization. That's exactly what you guys are positioned to help with businesses out and create another layer of advantage in a super competitive marketplace where people are under more and more pressure to create those margins, right?
Yeah.
Let's talk about what comes up next. So I know you guys have been talking about products. You've been moving more into the algo world. Tim, talk to us a little bit about the what's happening and how you guys are moving further forward product-wise.
Yeah, surely. So as we just said, I'm coming in at a time where we've got a lot of data and all the kit to analyse it. So it's now what do we do with it, and it's kind of where do you start, because there's so many different products you could build on top of the database. But the first new generation product is the Algo Forecasting Framework. Starting in foreign exchange, it will be in other asset classes, but it is currently live in foreign exchange.
And it's foreign exchange. As in choosing the asset class, foreign exchange was chosen just because of the background.
So the reason we start in FX is purely because I think between us we've got about 100 years of trading experience in foreign exchange, and that's just the thing where we came from. But the models that we create, the technology is asset class agnostic, so it could work anywhere. But the algo stuff, it's a problem that I wanted to solve 20 years ago and couldn't for the lack of data. So with algorithmic trading, things take time. You don't execute immediately. You by definition take time, and with that time comes risk and things move. So to be able to reason about what's the best algorithm, or what the performance is of an algorithm, is difficult because the risk in that time clouds the picture. Yeah. So it really is a big data modeling exercise, but there's no individual client, and really not even an individual algo provider that's got enough data individually to be able to accurately say what the expected market performance should be on average for an algorithm. Yeah. So it's a big data question. Yeah. And we've solved it. I think we're the first to solve it correctly. Yeah. In now being able to say either pre-trade what the expected response of an algorithm should be, or is expected to be, and then post-trade for people to actually be able to compare their performance against an objective measure, which should be the industry average curve for algo performance.
And that's a massive advantage, right?
Massive advantage. Yeah. Massive advantage, because previously, in the absence of that science, then it's an exercise in marketing. Yeah. Yeah.
That's incredible, isn't it? So if you think about where that comes in, and as you say, look, it's 20 years ago you couldn't have the it's a problem you need to solve when you can't do it. Now you've got the data to be able to do it, and to be the first on the scene to be able to officially solve that problem. That's a huge advantage to you guys in terms of scale and growth, and to the companies you're talking to. So it almost becomes a no-brainer.
Correct. So it proves the business model. Yeah. And now we're in the phase where you're trying to find the killer use cases, and what will really excite people, what will get people using the kit. So in a lot of ways the hard work's been done in building out the platform, but now it's trying to find the things that excite people, and it could be the stupidest thing. It could be just some market share thing, or whatever.
The adoption's always that bit, isn't it? What's the actual thing that's going to get someone utilising it on a desk on a day? Because I think that's a really interesting thing about tech, is there's loads of great theory behind a lot of products, and then the actual usability of the incumbents of people who are using it on a day-to-day basis is the things there where it becomes, you know, these sort of Frankenstein monsters of people trying to use different products and things, and then the actual usability of it is so low. But if you can get a product, I think, that comes in there that solves a real problem, it makes it easy for people to, and this is the whole digital world that we live in now. Everyone wants it as easy and simple as possible to be able to, to do their job and to do it well and to have that advantage with it. Fascinating. Right, I'm going to wrap up by talking about the future, and that's Balraj, just the future of the business, but also the future of the industry. Tell me a little bit about what we can expect to see over the next couple of years.
I think companies like Tradefeedr are going to make it easier and easier for buy-side and sell-side clients to collaborate on their shared data assets. So I see more and more data being made freely available. I see clients starting to use the global data sets that we create, so that more and more automation occurs on the trading desks, to a point where a bunch of trades come in to a client's trading desk, and the trading decisions can be automated using a global data set. And then all your exceptions are managed off this global data set. Banks are accessing that, and they're looking at their market share compared to their performance, and I see this huge drive of automated trading. Also, Tradefeedr is an API-first company, so we built it in thinking about people who are comfortable with Python programming.
Yeah.
And I see this will be a huge. What we're hoping for and what we're forecasting is a huge rise in the knowledge of Python on the trading desks.
Yeah. Well, I think that's inevitable as well. From everything we're seeing, if that's any benefit to you, that's the growth language, right?
Mm-hmm. Which then, given that we're presenting clients an API, unlike a fixed screen on a desktop, APIs allow for a lot more customization and a lot more tightly integration into clients' workflows. So and we're getting huge traction with clients who are comfortable with APIs first and foremost. So I see the drive of more Python and more data science on trading desks.
Yeah.
The availability of global data sets to base your trading decisions on is going to, I think, completely transform the way banks and clients interact and how they trade, and that last mile of data interaction. Will you trade with me, or why aren't you trading with me, or what's the optimal mix of liquidity providers? All those kind of questions can get answered if you have the data freely available.
It's data has got so many different opportunities to do things and drive efficiencies and make things better for it, hasn't it? Tim, you have the last word on that. What do you? I imagine you're nodding with everything that's been said there. Anything else you see in the in the crystal ball?
Well, we do, so natural next steps for the company. FX is quite near finished, but we've got to reuse that network across other asset classes. Very logical next step. I think that we need to start working through this vast universe of use cases that we can put on top of the platform. The most exciting one outside of just pure trading type stuff is the management consultancy type world. That's very manual at the moment. A lot of people doing surveys, and when you've got the data set of the industry, you can just do all of that, market share, reporting type stuff back to people to help them with their businesses. I think that's a new division we can build out. Yeah, I mean, it's just there's lots to do, and
you're enjoying it,
and not enough time to do it. Absolutely.
It sounds like fun, and it sounds like you're making a difference, which is something which I'm always which I always love to see. So, an exciting 4 years so far. It sounds like there's more excitement on the way. Tell us at the end, who should be reaching out to you, who's watching this at the moment, who are the sort of people that should be talking to you at the moment, and what's the best way for them to get in touch with you?
Any buy-side trading desk that wants to automate their trading decisions or get more access, not just to their data, but to global data sets to help them improve their execution outcomes, please get in touch.
And what's the best way for them to do it?
Well, given we're a FinTech company, I should say LinkedIn.
We were talking about that earlier on, so we'll tag you into all of this. Please do reach out to the guys. They're doing some phenomenal stuff. I love seeing businesses like this who are making a difference and doing some cool stuff at a time there where I think the market's in real need of evolution. So keep up the great work. Lovely having you on the show. Thanks for joining us today.
Thank you. Thanks for having
Good
us.
to see you. And thank you all for watching. We will see you soon on another episode of FinTech Focus TV. Thanks a lot.